the earnings season that kicks off with Infosys posting its fourth quarter numbers today. Analysts are keeping a close eye on FY18's guidance as well as cash utilization plans. Joining us now to discuss the same is Urmil Shah, research analyst at IDBI, and Moshe Khatri of Wedbush Securities. Morning, gentlemen. Thanks for joining in. Moshe, I'm going to come to you first on this. What are you expecting from Infi on the fourth quarter earnings? Is it going to be a good quarter for them? The last three have been disappointing, and I believe profits are expected to fall, 3.7%?
We're expecting the company to report inline results, and we're also assuming that management's guidance will probably be relatively in line with NASSCOM's guidance for industry growth for fiscal year 2018.
Moshe, over the last couple of months, we've not gone a day without talking about the concerns for the IT sector. If I even look at the way the stock has performed, it's declined, 16% in the last 3 months versus the index actually gaining, and the IT pack declining about 9%. So all in all, Infi has largely been an underperformer. And very evidently, the market is worried about the underlying stress in the business. Do you see slower growth in FY18? Do you think those worries are justified and real?
The stress, what you call the stress on the business, is a fundamental secular headwind that's impacting the space overall, where you're seeing some of the legacy services, whether it's plain vanilla, ERP implementation, software development, maintenance, testing, etc. These are historically have been labor-intensive and maybe somewhat asset-intensive services, moving into alternative delivery models that are asset-light and labor-light, such as cloud, software as a service, and automation. And with that transformation, you're also seeing a revenue deflation, and that kind of goes back to what you call the stress that the industry is going through. So this is an ongoing shift, and this is a work in progress for the entire group. Some companies are ahead in transforming their business away from legacy to digital. Many are not, and I just think it's going to take some time.
Urmil, let me come to you then. What do you expect in terms of the headline numbers? Let's start from there. Dollar revenue growth is seen to be around 1.5% in terms of EBIT and EBIT margin as well.
Yeah, so we are expecting the US dollar revenue growth of 1.4%. This includes a 20 basis point benefit from the cross-currency movement. We expect, Infosys to continue to invest in, building its domain capabilities, especially in the new technologies, as well as in sales and marketing. As a result, we expect EBIT margins to soften a bit by about 30 bips on a QOQ basis to 24.8, but within the guided band. And as regards the EPS for this quarter, we expect it at 15.7 rupees, which is a decline of about 3% on a QOQ basis.
And what's your view on guidance, Urmil?
Sure. So given that, last year was not so good year for Infosys, we expect it to be conservative in giving its guidance for next year. We expect a range of 7 to 10% as the constant currency revenue growth guidance for next year. We believe that till the guidance is in this range, this should be okay. And as regards the margin, we also expect Infosys to maintain its margin band, that is 25 percentage point for EBIT margins, plus minus 1 percentage points.
Moshe, the last couple of months have been rough for the CEO. I mean, we've heard about issues where he's had with the founders of the company. We've had a lot of senior management step down. And I think the bigger question here is, this has been a bellwether for the last couple of decades. It is a very large company for whatever it's worth. Do you think that the company of such a size can actually maneuver itself easily through growing segments quickly, or is it going to be a tough battle given largely because of how big this one is?
Yeah, good question. Among the legacy vendors, I would say that there is only one, you can point only to one company that's been able to foresee this trend and start focusing on this pretty early, and that would be Accenture. For Accenture, digital and cloud is about 40-45% of revenues, growing about 25-30% a year. If you look at the other peers, whether it's some of the India-based offshore peers, I would say digital for them is about 20-somewhat% of revenue. So I would say the adoption has been slow. I would say also that we started to see increased urgency from many other vendors to actually start doing that, probably last year and mostly this year. The adoption has been, or the initiatives have been relatively slow, but you're definitely seeing an urgency these days to start doing that. And if you think about this, you have to be proactive as a vendor to go reach out to your client and say, hey, we can do this for you cheaper and faster. And if you don't do it, someone else is going to come in and do that, and you're going to lose the account and you're going to lose the contract. So better be proactive. And hypothetically, at least, if you're able to save your client money, you can probably go back and say, look, we saved you X amount of money. Help us get at least a larger share of your IT budget, just to close the gap that gets created once you shift the legacy business more into the alternative delivery model.
Right. Well, that's the view coming in terms of growth. But Moshe, also, there is one segment of the market which actually believes that Infosys this time around might change the trend and might not actually put out an annual guidance, only because the market setup is changing so quickly. Do you think this time around could be a start of Infi doing a quarterly guidance as opposed to an annual one?
I would say that during the past few years, we've been kind of hearing back and forth the possibility that, similar to TCS and similar to Wipro, Infosys may actually cease to provide guidance, period. Clearly has not happened yet. I don't really have any visibility on what they're planning to do, but clearly it's an option if they decide that visibility remains an issue for them.
Right. Urmil, do you expect a buyback this time around to come in along with the P&L announcement, or do you think that if it does not, the market will be disappointed? There could be some stock correction post that.
So clearly the stock is not pricing in announcement of the buyback because they needed to give a press release to the stock exchange that the board would be considering a share buyback. So clearly at the time of the result, the share buyback is not expected. That's why the stock has been underperforming in the last week or so. But clearly commentary on the capital deployment strategy is what we would definitely watch out for. And we are expecting them to do a buyback in FY18. Of course, the timing will depend on as and when the board thinks it appropriate.
And Urmil, what would you like to hear as far as, let's first start off with the H-1B visa curbs. What kind of a risk do you think Infosys faces from that?
So as you rightly said that, there is no clarity as such till now. It's still not black and white, and this is a headwind that the sector is looking at. So clearly till it becomes clear as to what is going to be the stance on H-1B visa, that will continue to be a risk on the sector and as well for Infi. If you look at recently what has happened in the US, they have made the H-1B visa more stricter. To that extent, there could be impact on the cost side going forward. But I think that is already built in. I think till it becomes clear, however so negative it may be, unless and until it becomes clear, the headwind will continue for the stock.
Moshe, do you see any medium-term risk to the company as the noises get louder on the H-1B visa curb?
So a couple of things on that front, and this is based on a trip that we just hosted with investors with a policy expert on the space. And from his perspective, many companies in the space during the past 3 to 4 years have been aggressively shifting their business model and preempting any sort of onerous potential H-1B visa legislation that's coming through, because that was kind of expected as of 3 to 4 years ago. So we started to see more aggressive domestic recruiting. We are probably going to see a more aggressive push to increase offshoring, especially of legacy services that are today get delivered on site. And that essentially will help reduce somewhat the dependence on H-1B visas. On top of that, we started to see some of the vendors, including Infosys, pretty much canceling their H-1B visa petitions for junior personnel. And some other vendors, including TCS, are telling me that they're significantly reducing their H-1B visa petitions for next year. All this tells us that these companies have been very smart in terms of being able to preempt some of those legislative moves. The good news for all the companies in the industry is that some of those changes cannot be done via executive order. And some of them will have to go through legislation, and that's typically a 1 to 2 year process. So that definitely buys them time. And in our view, the end game is not going to be as disruptive as people think it is. And then the final point here, there's also a lot of publicity about the fact that the legislation will probably end up raising the average minimum salary stage for H-1Bs anywhere from $100,000 to maybe $130,000. If you think about this, on average, H-1B visa employees, if you include bonuses and if you include benefits, are probably close to about $90,000. Not very far from that $100K that we're talking about. The legislation that's focused, the bill that's focused on $130,000 is actually legislation or a bill that was written by Democrats. This is a bill that will never see the floor, given the fact that the Democrats don't have control of the House. So that's not going to happen anyway. So even on that front, it seems to be that the industry should be in a decent shape.
Moshe, Infosys is probably the only Tier 1 IT company that's not announced a buyback and rewarded its shareholders. Do you get a feeling that this time is probably the right time for a buyback or a dividend announcement? Is that on your watch list?
I think the company strategically should think very carefully about how it plans to deploy capital. And the company should balance return cash to shareholders versus investing in the business. That's my view. I don't know, and I'm not familiar with many investors that own the stock simply because of a potential special dividend that will be paid or not. But in my view and our view, Infosys should and will probably do that, think very strategically about how to deploy their capital.
Right. Urmil, coming to you, you speak a lot, I'm assuming, to institutional clients as well. Do you see a lot of negativity around the Infosys stock currently?
Clearly, our clients are cautious and I would say cautiously optimistic. But it's the feedback which we are getting is that the bottom is yet not in. There is still quite a bit of uncertainty which is there with the sector. We talked about the H-1B visa. Secondly, as regards how the currency also moves in the near term. So there are uncertainties which are there for the sector, and if you look at other sectors, when clients would look at the portfolio, sectors which have having good visibilities have done well. So clearly, while clients are given the valuation, clients are cautiously optimistic, but clearly the worst is yet not come in.
Right, Urmil, and finally, before we let you go, what's your recommendation and price target on Infosys?
Infi and HCL are the only buys amongst the large cap for us. For Infi, the target price is 1215.